morning and welcome to Market Opening on our collab show between Business Today and India Today TV just after 9, and we're here to get you all the market opening action. Let's take a look at the headlines. The US Federal Reserve cuts interest rates for the third consecutive time, but the vote is highly split with 3 dissenting members. One more rate cut flagged for next year as the Fed warns that inflation still remains high and the job market is cooling. Trump says the cut is too small. Dow Jones up more than 1%, Asian markets also in the green. Indigo chairman Vikram Singh Mehta apologizes for last week's mass cancellations, vehemently denies allegations that the airline engineered the disruptions to bypass new FDTL fatigue rules. The DGCA, meanwhile, has tightened the noose on Indigo. An oversight team will be keeping a tab on its operations. It's one of the biggest deals by an Indian IT company, TCS, to buy AI services company Coastal Cloud in an all-cash deal of $700 million. Coastal Cloud is a Salesforce Summit partner and offers artificial intelligence-led advisory and business consulting services. Analysts say the acquisition will help TCS in the mid-market customer segment. Donald Trump launches the Trump Gold Card visa, US now taking online applications for the new path to citizenship. The new visa allows foreign nationals to get permanent resident status by paying $1 million to the US Treasury. The visa is also open to corporate sponsors for hiring 1 or 2 more employees with a $2 million payment per employee. All right, and markets are eyeing a green start after a 3-day losing streak, with the GIFT Nifty up about 90 points, tracking US gains post the Fed rate cut, though FI selling is also persisting at this point of time. 1,651 crore rupee in outflow that we're seeing. Overnight, of course, on the back of the cut, Dow up over 1%. The Fed delivering a 25 basis point rate cut exactly as expected, bringing the Fed fund rate down to 3.5 to 3.75%. But the move did come with a note of caution. The FOMC saw 3 dissenting no votes, the most since 2019, and policymakers signaled only 1 quarter-point cut in 2026. Chair Jerome Powell said the committee will now move carefully, staying attentive to both inflation and jobs data. He also added that while AI might be contributing slightly to softness in jobs, it's really tariffs that are driving the inflation overshoot. The Fed also announced that it will begin buying $40 billion in Treasury bills starting Friday. Despite the cautious tone, Powell effectively ruled out the possibility of any rate hikes ahead, saying a rate hike is nobody's base case right now. He stressed that the Fed is now well placed to watch how the economy evolves and respond based on incoming data. Soon after the US Fed rate cut, President Donald Trump launched a scathing attack on the central bank and its leadership. Trump called the cut a very small number, saying it should have been doubled. Here's what Fed Chair Jerome Powell said, and right after that, President Donald Trump's sharp criticism of Powell's move.
A reasonable base case is that the effects of tariffs on inflation will be relatively short-lived, effectively a one-time shift in the price level. Our obligation is to make sure that a one-time increase in the price level does not become an ongoing inflation problem. But with downside risks to employment having risen in recent months, the balance of risks has shifted. Our framework calls for us to take a balanced approach in promoting both sides of our dual mandate. Accordingly, we judged it appropriate at this meeting to lower our policy rate by a 1/4 percentage point.
We should be able to do a lot better than 3 and 4. We're scheduled to be at 4%, which is pretty amazing because we have a deadhead Fed hair. I mean, this guy, the head of the Federal Reserve is a stiff, and you fight that. It's amazing. We fight that, and yet interest rates are going down, except with him, not too much. He did a rather, I would say, a rather small number that could have been doubled, at least doubled.
All right, we're now joined by our colleague Shailendra Bhatnagar, Chief Analyst and Editor Markets. Rajesh Palvi also with us today, Head Technical and Derivative Research, Axis Securities. Let's take a look at how the markets stand. Just 2-3 minutes to go for opening this morning. How's the setup looking, Shell?
Good morning, Aabha, and a very warm welcome to all viewers who are with us on India Today Television. Well, Aabha, I wish we could just lock away the Nifty and the Bank Nifty for 5-7 days and then look at them after a fortnight or so. All the pain would have been absorbed, but it's not looking good for indices at least, and the broader markets also seem to be in a bit of pain, but lots of individual stocks that might do well. Especially the chemical sector is looking stronger than most. So the usual suspects from there, SRF and Naveen Fluorine. Plus you see a lot of interesting trades coming in the infra space. Therefore, Siemens as also Cummins India. And of course, from the NBFC space, Chola Finance and AV Capital, L&T Finance. So bit gains, but broader markets refuse to sort of latch on to the gap up that happens, and then there is heavy selling pressure coming in. So December is going to be painful, Aabha.
All right. Rajesh, good morning. Let me get a view from you as well on the markets despite the Fed rate cut. And I think this is what's really worrying everyone. We haven't seen any kind of fillip. Any of the news triggers have not really led to a major bump up when it comes to buying sentiment.
Good morning, Aabha. Good morning, everyone. So, looking at the near-term, short-term setup, setup has turned, slightly weaker in compared to, which we have seen in the month of October. Nifty is now trading below to 20-day moving average. Nifty has broken the important support area of 25,800 put-based concentration. Looking at the data on other sectors also, some of the stocks where we were seeing, that strength was there again, witnessing profit taking at higher level. So leadership is absent at this juncture to support the indices at this juncture, and banking stocks which were holding the ground is also attracting the profit taking. So we believe that, market is still cautious despite, this Fed outcome. I think there is no as such thumbs up by Indian market at this juncture. I think 25,700 is the immediate level to watch for intraday perspective. Though put-based concentration is clearly showing, PCR ratio is clearly showing that, we are in oversold trajectory. But we have to see how 25,700 able to defend or not. If it breaks below 25,700, then we may see further more liquidation. On the higher side, 25,900, 26,000 are major supply zones. So that is very important and challenging level for near-term trend. Even on the Bank Nifty now trading below to 59,000 marks. So I think that's the immediate level to watch for. If we again able to regain, then some recovery would be there. But select pocket where one can focus on the trading side that are showing a sign of strength. So very
right.
Sector and stocks are available to on the buying side.
Okay, all right, let's take a look. We're just counting down to opens. I just want to bring up some of the stocks in news this morning. Indigo, of course, is going to be top of our radar. And remember, lots of news coming in with Indigo actually cutting now its Q3 capacity guidance. A high single-digit year-on-year growth in Q3 capacity, and government order to cut flights to impact both Q3 and Q4 for Indigo. Loss of revenue due to flight cancellations. Overall financial impact is yet to be audited, but clearly there is going to be an impact on Indigo, and we're finally starting to see that. Until now, most brokerages have pretty much maintained that Indigo will managed to continue to rebound from this entire week and the kind of a mess that they've seen. But now we're starting to, of course, get some reports coming in that we might see an impact in the next couple of quarters, and especially after we've seen, the government also take action here. It's been a week of unprecedented chaos in the skies. Indigo has denied any attempt to game pilot fatigue rules. Tens of thousands of passengers were left stranded, and regulators fuming after Indigo failed to comply to new aircrew fatigue rules. Chairman of the board, Vikram Singh Mehta, has apologized to flyers but has rejected allegations of engineering the flight cancellations.
However, there are some allegations that are untrue. That Indigo engineered the crisis, that we tried to influence government rules, that we compromised safety, that the board was not involved. These claims are incorrect. Indigo has followed the pilot fatigue rules as they came into effect. We operated under the new rules throughout, both in July and in November. We did not attempt to bypass them, nor did we do anything that negatively impacted our unblemished track record of safety. The disruptions of last week did not happen because of any deliberate action. They happened because a combination of internal and unanticipated external events, including minor technical glitches, schedule changes linked to the start of the winter, adverse weather conditions, increased congestion in the aviation system, and implementation of and operation under the updated crew rostering rules.
All right, that's Indigo continuing to be in focus. The stock, let's just pull that up for you as well on opening and see how it's continuing to perform on the back of all of this news. And of course, we've also had a revised winter schedule submitted to the regulator. The stock continues to be down about 1% or so, and we'll bring up the weekly performance as well, just to give you a sense of what's been happening on Indigo, with the chairman of the board finally speaking out and apologizing as well, down about 12.5% this week. That's the big news maker this morning. Shell opening ticks. What else are you picking up? I can't remember the last time post a Fed rate cut markets were this quiet.
Well, Aabha, that's the nature of the beast now. No matter what the good news is, the markets will refuse to accept it. And as I have been telling a lot of sensible people, that if you are just a normal investor with money in mutual funds and a SIP in place, you need a holiday and you need to sort of enjoy the next 15 days, enjoy the Christmas chill, and just have a holiday. Nothing is happening. From the beginning, the advanced decline ratio is negative. 1,000 shares in the green versus 1,500 in the red. The only gainer worth its salt is the IT and the metals index. Nifty PSU Bank was oversold, so there is buying happening there. And how can we miss Hindustan Zinc? This is something that we've talked about earlier. So those gains are there in the market. You have DCM Shriram 3.5% higher, Hindustan Zinc 1% higher, a bit of buying happening on Bombay Stock Exchange, but the real game will come after 1 hour of trade. Let's see how it goes, but it's just slipping and slipping. The lone gainer being Eicher Motors, a record high 7,300 on the NSE 500. So that's the sad story of markets today.
It is pretty much red all around, I have to admit. Rajesh, let me come to you. You were also, of course, tracking some of those expiry levels. Some amount of respite on IT, of course, a big deal in TCS as well. So I'm just going to pull up TCS in particular, but I'm seeing limited gains across some of the IT names. Where would you perhaps hedge your bets at a time like this when markets are looking extremely weak? Okay, I think we've lost Rajesh's audio there. Okay, let's pull up TCS once again on the screens. Remember, there have been a spate of pretty large deals when it comes to AI and cloud, and the latest one there also leading to about a 0.5% uptick on the giant. So that's TCS for you today. All right. Rajesh, I think we have you back with us. Just wanted to get your view on some of the IT majors, and possibly, would you suggest IT as one of the strategies in a weak market?
Yeah, I think IT could be a contra bet at this juncture, as Rupee has already weakened, and the benefit of dollar strengthening is going to play some positivity in IT sector, as already we have seen a major correction in the last couple of months for IT stocks, but some recovery is taking place in large cap IT as well as in the mid cap IT space. So from large cap IT space, I think TCS is a bet where one can focus on as stock managed to give breakout on the near term, short term structure. So if it continues to trade above 3140, 3150 level, some buying interest would be there. And on the higher side, once stock crosses to 3250, I think short covering action can trigger further here and possible rally to 3350 we could see. But from that space, I think LTI Mindtree is looking promising the way stock has moved up in last couple of weeks. I think here this stock has potential to extend its gain and possible rally towards 6400, 6500 we could see for LTI Mindtree. So one can focus on LTI Mindtree also along with TCS on the downside. 6120 needs to keep as a stop loss.
All right, that's on some of those IT majors then. And let's talk about metals, because Hindustan Zinc is up about 1%, and what's keeping it up is, of course, some of those metal prices which continue to go from strength to strength. So let me get a take from you on that as well, Rajesh.
So Hindustan Zinc has bottomed out on the long-term chart also. After a long consolidation, we have witnessed, breakout in Hindustan Zinc, and the way stock is now trading above 510 level, I think if it's sustained above these level, next target would be around 535 to 540. Stock is, now penetrating its contracting triangle formation breakout on the monthly chart. So one can hold the position, and metal as a pick, I think with Vedanta, Hindustan Zinc, National Aluminum, all these stocks, one can keep on their focus. And we believe that, some more upside momentum we could see in the near term for these stocks.
Okay. Ola Electric, let's pull that one up for you, down about 5%. We've got a downgrade coming in. S&P has downgraded promoter ANI Tech to CCC minus from CCC plus. This doesn't come as a huge surprise, Shell, on Ola Electric, given the spate of bad news and underperformance that the counter has been dealing with. Markets have been waiting for a long time for some kind of strategic commentary or reassurance, but clearly that's not been forthcoming, and that stock is now seeing a bit of a nosedive coming in on the back of a downgrade.
Well, it's not exactly a nosedive, Aabha. It's a record low, and we had seen somewhere like 160 post the listing. This was in August of 2024, and from 160 we are now down to 34. So that's the state of play. Ola Electric is the only two-wheeler stock in the entire auto space that is actually at a record low, when many other auto stocks such as Eicher, Hero Motors, Bajaj Auto, TVS Motors, even all ancillaries dealing with the auto space, including four-wheelers, all of them have hit record highs. In fact, auto has been a source of strength over the last 3 months in the market, but Ola being Ola is where it is.
Yes, recovering a little bit from the opening loss, but as Shell said, record lows coming in. And all right, let's take a look at the overall index now, just in the green, just marginally. And Ola Electric is just recovered slightly, but still down 1% and trading at record lows. What about banks, Shell? We've not talked too much about banks this morning, but we are seeing the Fed say that no further rate cuts, maximum 1 in 2026. So given that we're at this juncture, how much more scope is there? We've had the RBI commentary come in, we've had the Fed commentary come in. It looks like status quo now for the next few quarters.
Well, Aabha, I would just de-link our markets with what the US Federal Reserve is trying to say, because both the Nifty and the broader US markets are not in sync with each other for the moment, at least. That's because of the lack of a US trade deal and, of course, the record low on the Rupee, which again are linked. But nevertheless, banks, in particular public sector banks, are the cornerstone of the Bank Nifty at this point of time, and offer, on charts at least, an opportunity to get back into a very strong up move that is continuing for various tailwinds that are there in the macro space. A reduced interest rate cut helps bond portfolios in PSU banks, which are in the lakhs and lakhs of crores. So that is something that needs to be looked at. on the medium term, but stocks like Canara Bank, Bank of Baroda, SBI, Indian Bank, and of course PNB are opportunities which the market is giving on the long side. Aabha.
Okay, all right. Rajesh, closing comments from you as we wind up the show in terms of what you feel we could close at today, given that we are going to see expiry.
So I think banking is the pocket where one can focus on. I think as Shelji mentioned, yes, PSU banking basket is looking promising. So here we could see some traction, especially in Bank of India, Union Bank, and from private banking. I think one can focus on Federal Bank as well as Kotak Bank. So these banking stocks are looking attractive on the technical front. So some more recovery we could witness, and some of the NBFCs like Chola and Bajaj Finserv, all these stocks are also holding the strength. So one can focus on very select banking and financial space at this juncture, and some recovery is going to continue in metal space. So as we discuss about Hindustan Zinc, Vedanta, these stocks can be focused, and from capital goods, Cummins India as well as Siemens, these two stocks are also showing sign of strength. So I think these are very limited pockets where we feel that opportunity is there for intraday perspective. As Nifty is still struggling to cross 25,800, so I think one needs to be very stock specific in these kind of market, and where the strength is there, I think one can focus on only those stocks where strength is continuously showing sign of buying interest.
All right, Rajesh, thanks for that sound commentary coming in. Keep an eye on some of those stocks selectively as the markets continue to look a little bit nervous at these levels. Clearly, no major fillip coming in on the back of the rate cut, which Trump is calling too small. And Indigo, meanwhile, continuing to, of course, be under the scanner. We'll leave it there for now, but we'll be back at 3 p.m. with all the action on market closing.
From how the markets move today to what's setting the stage for tomorrow. From tariffs to taxes, mutual funds to your daily stock queries. Join me as I decode the biggest wealth-creating ideas for you at the closing bell. Watch me as I bring to you the Business Today show every weekday at 3 p.m. only on India Today.
From overnight global cues to live Dalal Street moves, we decode what matters for your money today. From stocks to sectors to the top business news. We've got your morning game plan covered. Watch me, Aabha Bakaya, as I bring you the opening bell action Monday to Fridays, 9:05 a.m. only on India Today.
Good morning, ladies and gentlemen. A very warm welcome to all our viewers on Business Today Television. It's Thursday, and we are now looking at a mild updraft on the Nifty. 25,800 is where the bulls and the bears are battling it out. A nice green tick on the Nifty, courtesy the Nifty Bank and the Nifty IT. Both of them also are posting modest gains. But what the issue is in the market is that the rate cut in the US markets by the US Federal Reserve to the extent of 25 basis points is still not coming to the benefit of the markets, and it remains to be seen whether this early morning uptick will be sold into or not. Advanced decline ratio is painful. For the moment, it's 1:1, 1361 shares in the green, 1244 in the red. The rallies on the market led by PSU banks, Bank of India, Bank of Baroda, PNB, Canara Bank, SBI in top shape. On the IT index, there are 9 out of 10 stocks in the green. The mid-cap select index is 0.66% higher. That's how the structure of the market is at the moment. When you look at the top traded counters, Pain on Indigo, top traded in terms of volumes so far. You have about 880 crores worth of shares traded on Indigo. The counter now a percent lower, 4767. Lots of government steps being taken to rein in the problems that Indigo is trying to face, and that's weakness for you. But strength coming in or short covering happening on the EMS space after very, very painful days. Keenest Technologies 3% higher, Dixon Technologies 1.5% higher, and of course the capital market twins MCX and BSC putting some kind of strength. We should be joined by Mitesh Panchal. Yes, he's with us. Namaste Mitesh ji. बड़े दिनों बाद आपसे मुलाकात हो रही है. Good morning to you, sir. How are you seeing this moves on Nifty and Bank Nifty? Everything gets sold into, and both indices normally end at day's low. What is ailing the market?
Okay. Good morning, Sanjay. Good morning to all our investors. So first of all, let's talk about Nifty. We have the view that Sanjay, Nifty is in the process of bottom formation. So at the current level around 25,700, 800, Nifty will finally form a bottom, and again the upward journey will start. So we recommend going long at this stage at 25,788 with a stop of 25,500 for the potential target of 26,200 and 26,500. So this is about Nifty. Since last 2 days, there is a comfort with respect to the PSU banks. So today, if you see also Bank of India, then we have Canara Bank, we have PSU, Punjab National Bank is gaining momentum. So we have the view that Bank Nifty is also in the process of forming bottom in the range of 59,000 to 59,100. So with a stop of 58,700 with a stop, we are advocating buy in Bank Nifty at 59,667 for the potential target of 59,500, 59,800. So for us, I think after last 3 days of a volatile phase, today or tomorrow probably the market will bottom out and resume its upward journey.
Mitishji, what is wrong in the internals of the market? Yes, technical levels are there for all to see, but it is for experienced and long-term traders such as you who can actually decode what is wrong within the indices. What do you think are the broader markets missing? Yes, sir. Please continue.
Yeah. Yes, sir. Sorry. So what is missing is a leadership. I think, can you tell me any sector or any stocks which is, taking the lead in the next 10 or 15 days? The answer is no. So I think if you look at the private banks, they are not participating. If you look at even any sector within the Nifty 50 pack that is not participating, even Reliance is muted, even HDFC Kotak Bank is also not participating. So I think the leadership is missing, and that is the reason why we are observing or analyzing a muted performance on the indices. So as long as the leadership is muted, Shaji, we will be in a consolidation zone. Once the leadership comes, any stock which comes on the front line from the leadership perspective, then we will see a sustainable upside in the index. But I am of the view that Shaji, experience tells me that this time around probably the leadership will not come, and slowly and gradually we are hitting a new high. So one day Reliance will participate, another day HDFC Bank will participate, the third day the pharma will participate, and slowly and gradually we'll be inching towards 26,500. Interestingly, what we are observing since last 2 trading sessions is that there is a good amount of attraction in selected stocks from the mid cap and small cap. For example, if you look at GMM Fodler from the lower level, it is by getting by momentum. If you look at Canfin Home, Hindustan Copper, Anantaraj, Finolex Industries, so is the case with the Avanti Feeds, Sakti Pumps, the restaurant brand Asia Limited. So all these stocks are now getting attraction, which means for us is that the broader market rally has started, and slowly and gradually the rally will pick up the space.
Fair point. Within the Nifty, what are the two charts that still exhibit strength?
First is, again, both the stocks are from the PSU basket. So first, what we like is Coal India. So Coal India is looking pretty promising as of now. Even though it's a boring story, probably will take some time to start. But at 382, we are of the view that above 360, there is a strong, a chance for the stock to play. And going forward, 420, 450 is what we like. Sorry, second stock is from the private space, and that is Tata Steel. What we like in Tata Steel is that at a perfect 200 DMA at about 160, 165, the stock is available. So from here on, there are strong chances that we will see a rally resuming to the level of 180, 200. So Tata Steel and Coal India from the Nifty 50 pack is looking pretty interesting.
Okay. Would you want to comment on the mid cap and small cap indices? Mid cap 100, small cap 100. Unless the indices show some kind of a turnaround, there is little or no hope for holders of mid cap and small cap stocks. Some of them who have corrected about 35-40% in the last 2 months alone. Miteshji, what are small cap and mid cap index charts telling you?
See, Shelji, again, with an experience, I can tell you, if you look at or break down the weightage of the stocks in both these indices, it is not just like Nifty 50, wherein HDFC Bank and Reliance, if you manage to pull up these two stocks and the Nifty will be up. In case of like mid cap and small cap, there are too many stocks, and each of the stocks is having an equal, almost equal weightage. So in mid cap and small cap indices per se, you cannot have few stocks which are performing and then that indices will perform. You have to you have to ensure that the whole bunch of the stock which will perform, and that is what, as I said, it is visible. So we are not looking typically at the indices. Probably if I read the indices, I will not be able to participate in the rally, because from the indices perspective, yes, it's going to be consolidation zone in the next 3 or 6 months. But in the next 3 or 6 months, there are number of stocks which will give very good return. For example, since last 2 days, if you look at the entire agri basket, the sugar stocks and fertilizer stocks are coming on the radar, right? Now, when I correlate this with the indices is still not giving me the comfort. But on this side, I see a significant upside in the next 1 to 3 months from a technical perspective in both sugar and fertilizer. So the view is divided. I think we should look at the individual stocks rather than these indices. As of now, as per our analysis, the indices of the mid cap and small caps are not giving us really a kicker which says that yes, the rally will resume going forward.
Okay, strength, ladies and gentlemen, on the metals pack, Vedanta is now up for the third day in a row. Of course, we've discussed Hindustan Zinc in great detail, a rally for the third day now with us. Showing signs of strength is eternal after a very, very sharp sell-off. Remember, we've seen 350, 360 in October, and now the stock is at 287. There's no stopping National Aluminium. This is probably a good swing trade in the making, with Miteshji might want to comment on. Strength in Hind Zinc and Vedant for the last 3 trading sessions. Nalco seems to be showing signs of catch-up. Miteshji, your view?
Yeah, absolutely. I think the entire space is looking pretty interesting. And among them, if I have to pick up, I'll pick up Nalco and Tata Steel. As I said, even Tata Steel is at a perfect sweet spot at 160, 165. I think there is a strong possibilities of the stock to taste the 180, 200 levels. And as far as National Aluminium is concerned, again at a sweet spot of around 260, 265, will test around 200, 320 going forward. So Nalco and Tata Steel is looking promising chartically from the current level.
So that's the view that's coming in on Nalco as well as Tata Steel. 940. What's really interesting is what I've been talking about. The markets have now started to slip in the red across the board. Nifty Bank slipping about 300 points higher from the day's high. IT index now in the red. As a consequence, the Nifty 50 has lost 50 points. So 25,800 is the new resistance where call writers are making it difficult for bulls to come up. That's the space, ladies and gentlemen, that is there. And let me at the same time mark the deterioration that we see in the advanced decline ratio. Again, just 1,000 shares in the green, and those in the red now number 1,600. So it's getting worse even within the first half an hour of trade. Mitesh ji, lots of views coming in on Indigo, and the clarity that is there is on the stock price. How do you see this erstwhile winner in the markets behaving on the charts? What lies ahead?
See, as far as the entire space is concerned, I think one need to wait and watch because there is too much of a noise around. So I think it's just like a falling knife. Leave it for now. Let the stock formally form the base. It is advisable to buy 200 rupees or 5 or 10% up, but not advisable to catch the falling knife. You never know what is going to happen because it's a single market dominating the entire. It is a single player dominating the entire market. And now it's a tussle between the government and the private players. So I think leave it for now. Earlier it seems to be like 4,800 is a base, but now it is broken badly. So probably now you can put any figure at the base like 4,500 or 4,600, but that is Shelji meaningless. I think let the stock find its own bottom, and then we'll take a call.
Okay, fair point. Would you want to stick your neck out on this debate whether the best of Indigo in terms of stock price is behind it or not?
Not really. I think not really. I think Indigo has a long way to go. Probably on the upside, if I talk the target, it's a laughable figure. So let's not talk about it. But I think, yeah, this is a problem. Because of that, this is an attractive prices which are available. But the only point why not to buy is that let the stock form the base, and then we will buy. Probably maybe at 4,500, 4,300, maybe at the current level. We don't know. But I think the best of the times for Indigo is not over. I think the stock has a significant upside going forward in the next 1 or 2 years. Probably you may see a levels of around 6,500, 7,000 kind of levels on the upside. So best of the time for Indigo is not gone. This is a lucrative opportunity. The only thing is that we will buy only when the base is formed. The reason is that after such a sharp fall, there are strong chances, Shelji, that the stock will move into the consolidation zone for a prolonged period of time. So what we believe technically is that we always talk in terms of opportunity cost. So if I'm not making money in Indigo for the next 3 months, where should I make the money, right? So as of now, if I'm given the opportunity, I will not get into Indigo. Probably I think steel is looking better, fertilizer is looking better, sugar is looking better. When the stock looks better, we will again shift our focus to Indigo, but not now.
Okay. What looks good in fertilizer and sugar?
So sugar, two stocks, Balrampur Chini is looking attractive, EID Paris is looking attractive. If you look at the monthly chart or the weekly charts, it's all about heart of formation. As far as the fertilizer is concerned, Chambal Fertilizer and Nagarjuna Fertilizer is looking promising. So I think these are the 4 stocks from these 2 baskets which are looking pretty interesting on the chart. We are of the view that going forward, probably in a quarter or so, the stock has the potential to deliver 25 to 30% profit. So with a stop of 5 to 7% from the current level, you can take a call in all these 4 stocks.
Okay. What else, sir, should one be doing as far as the rupee is concerned?
I think rupee for us is like it's in the last leg of top formation. So between 90 to 92, we are of the view that rupee will form a top, and going forward, we see a sharp appreciation. Our target strategy for the next 1.5 year, that is 12 to 18 months, is around 78 to 80 on the downside. So we see a strong chance of rupee appreciation in the next 12 to 18 months technically, and the top formation will take place between 90 to 92. Same is the case with precious metal. We have seen a very strong run up both in gold and silver, and we are also of the view that both the gold and silver is in the last leg of top formation. For us, the silver prices will form a top in the range of 2,25,000. and gold will form a top between 1,50,000 to 1,60,000. So we are entering, as far as gold, silver, that is precious metal, and currency, that is rupees, USD, INR is concerned, we are in the last leg of top formation.
Fair point, Mitesh ji. As always, it's good to be in touch with you again after a very, very long time. Thank you so much for your time. And here's wishing that the trades on the long side, as also charts on the long side, start to look up. Thank you for your time, sir.
Thank you, sir. Thank you for inviting.
That, ladies and gentlemen, was Mr. Mitesh Panchal, a very well-known and experienced watcher of charts. Well, the half an hour has lapsed in the market. Nothing to talk about at all. Slippages and slippages galore. Now the fresh resistance on the Nifty is 25,800, and the battle to retain 25,700 is on between the bulls and the bears. It's not looking good for long side trades. There is pain all around. Advanced decline is negative, focusing on bears. Pockets of outperformance, and that too relative, are only in the metal space, to some extent IT, and who can forget the oversold condition in PSU banks, and therefore you see a mild uptick on the PSU banking side. Thank you for watching. Stay glued on Business Today Television. We'll be back shortly.
When it seemed that tensions between India and the US was waning, and after the very recent revamp of the US national security strategy that emphasized on strengthening economic security and geopolitical